South Korea's economy is showing signs of constrained improvement despite a strong export growth as domestic demand remains weak. This latest assessment comes from the Korea Development Institute, a state-run think tank. Our Lee Soo-jin has more.
Limited improvement in economic conditions due to a delayed recovery of domestic demand. This is how a major state-run think tank, the Korea Development Institute, evaluated South Korea's economy in its monthly report released on Monday. The nation's industrial output and consumption both fell in July, reflecting weak domestic demand. While industrial output rose 2.7% from the previous year, it fell 0.4% on month, the third consecutive month that the index has declined compared to the previous month. This was mainly due to production in the mining and manufacturing industries dropping 3.6% on month, the largest drop since December 2022. And retail sales, an indicator of consumer spending, dropped 2.1% on year in July. The value of construction completed fell again in July, dropping 5.3% on year for the second straight month. But exports remained solid on the back of a robust demand in the ICT sector. The value of exports in August reached $57.9 billion, rising 11.4% compared to last year. This marked the largest export figure for the month of August on record and was the 11th straight month that exports posted growth. Shipments of 7 out of 15 key export items rose, with exports of semiconductors jumping 38.8% on year, computers a whopping 183.2%, and wireless communication devices more than 50%. Meanwhile, inflation in August also eased to the government's target level of 2%, the lowest seen since March 2021. This came after the consumer price index rose 2.6% the previous month. As for the global economy, the report said that it continues to show moderate growth, mostly in the service sector, but the uncertainties remain due to high interest rates, ongoing geopolitical tensions, and weaknesses in the manufacturing sector. Lee Soo-jin, Arirang News.